Step number 4, how to source the ideal deal. So we've identified our sandbox. Where are we going to invest? Then we identified our budget. How much are we going to spend on purchase and renovation costs? And then step number 3, we've identified what type of asset that we're going to buy, right? What are we going to buy? Single family, multifamily, whatever. Now comes the hardest part. Step number 4, which is how do you actually find the deal? And I always say this is the most difficult part of all. And all real estate investors will say this. Like, we can analyze the deal all day long. We can know what we want and all that stuff. But then to actually find it is a whole different story. Now, I have some different ways that I've used in order to expand my real estate development business, which has been super interesting. And a lot of it's like organic, and then also some of it could be like your traditional marketing and all that kind of stuff. But technology has switched things around a little bit, so there are more opportunities in the digital front. But let's go through them. So step number 1. Now, let me remind you, just in case you didn't know, that real estate is a local business. That's exactly what it is. Right? So real estate is the community in which you live or where you invest or whatever. Real estate surrounds us everywhere, right? It is literally the fabric of our neighborhoods. So that's a really big deal. As a real estate developer, you hold a lot, or an investor who's purchasing property, you hold a lot of responsibility within that community in which you own, right? So it's very important to understand the fabric of all of that and the people who are involved in that. And what I mean by that is the real estate agents in the community that know what's going on at all points in time, and also the business owners. Those are 2 different ways that I tapped in to the market initially. I said, I want to focus in West Roxbury and Rosendale, and I want to meet the best real estate agents, and I want to meet all the small business owners and anyone else that I can meet at the community YMCA or what have you. They're going to be your best source of information, because guess what? You don't spend a dollar, and also you are able to gain trust with them and get into deals in such a way that other people wouldn't, right? So throughout my real estate investment career, it's been crazy because a lot of people ask me, Pam, but you don't really I don't see you writing like the handwritten letters or sending out all this direct mail or, doing a lot of ads and campaigns and stuff like that. I said, yeah, because I invest heavy in my community, right? And people know what I do. So when they think of me, they think Pam buys single families and then she buys multifamilies. Now I'm getting more into commercial and some other assets as I'm expanding, right? But they know me for real estate. So it's really important that you establish yourself within the community that you want to own or develop or invest in, right? Because you're a stakeholder now. And so are they. So the agents are huge, huge. Building great relationships with top real estate agents in the city that you want to invest in is absolutely key, because guess what? They could have things that are on the market, but a lot of agents know of things that are off market as well. And if you treat them well and build a great relationship with them, they will always give you the best access to the best deals through word of mouth, which is incredible. So that is a great key. And business owners, if you're going in supporting your local pizza place or whatever, and you just say to them, hey, I'm interested in buying some property. Do you know anyone who was looking to sell? They'd be like, oh yeah, we actually had a customer. Let me call them and give them your contact information. Amazing. What better referral could you get from that? That's a warm referral. Someone's going to pick up that phone and say, oh yeah, I was in. They told me all about you, said you're super nice. And then all of a sudden you get the in-person meeting and you rock and roll. That's how I did most of my deals. People could not believe. People were like, how are you finding these deals in this market? I just don't understand, Pam. And so for me, it was people calling me left and right with different things because they trusted me, because I invested time into them. And I didn't make them feel like they were just another number or I was just another investor who really didn't care and cared only about profit margins. So that's a really big deal. That's one way to source some deals and really to be knee deep in your community and always be building the most trusted base ever and have incredible deals that flow through. Never underestimate the power of word of mouth and also relationship building within your community. That I think is number 1. If you're not doing it, I highly suggest you should, because it's going to change your business. One of the other ways that you can find deals is, of course, MLS. Now, given different market changes, that could really fluctuate, right? At the height of the market, it's going to be really difficult to find things publicly on the market that's a good deal, right? Because sellers become greedy on their asking price. And if they think that there's a lot of people willing to buy it, they're going to, of course, raise it, right? Supply versus demand. But if you're at where the market dips and shifts a little bit, then that's going to be a different story. So you can see a property that's, say it's listed for $500,000 publicly on the MLS, and it's been sitting for a while. you can go in and negotiate. That's leverage for you. I've gone in and purchased deals off MLS, $150,000 less than what it was listed for. And I gave my reasons why. You always give the data. You never say, put emotion into it. You give all the data and you say, this is why my purchase price is what it is for you. And here's all the data to back it up, right? So you can still find deals on MLS. That sometimes can work, and you can leverage and negotiate. That's without a doubt. Again, in your sandbox, within your budget, within the asset class that you're looking for. Really, I mean, there's so many different things that we could do now, which is like social media marketing and just like different Facebook groups. And I mean, there's so many different ways to get the word out. But again, if you're focused on your niche, like we talked about, it is so easy for people to think of you when they've got something, right? So if it's a Facebook group, they're saying, hey, anyone here interested in single family house? And someone can comment, oh, Pam's interested, she buys in this area. And then they tag me and I'm like, oh, sweet. And then I connect with the owners. That's pretty powerful. So through social media, Facebook groups and stuff like that, super key. And then you could also do like Facebook campaigns. You could do a whole bunch of stuff. These are more things that you start in the very beginning when you're first starting out and purchasing property and investing and all that. But I'm going to explain to you a little bit more on how the professional real estate investors get into scaling and buying more and more properties into this next section, which is still part of number 4, automated lead generation systems. And this stuff is pretty powerful. So this is after you've mastered your niche and you want to scale up and you want to rock and roll. This is the different marketing that you can use to basically source those deals. So the automated lead generation systems that get super fancy schmancy that I know real estate investors use, a lot of them use direct mail. They still send what looks like handwritten letters to property owners, right? Whether it be probate or divorces or foreclosures or whatever, they are constantly sending mail that looks like it's handwritten to these sellers. And that's still a very great way for lead generation for lots of real estate investors all across the country. Because how cool is it to still receive a piece of mail that looks like it's handwritten from somebody, right? So that captures attention to the seller, and you really write like a personal note to them, and that draws a lot of people in. I know a ton of real estate investors that utilize that, and it takes that to the next level, right? So you're actually communicating, they see your letter, they'll call you. So that's a great lead generation source. So with these mailed letters that you can send, you actually need to know where are you going to send them, right? Like, you're not just going to send a random letter to a person and think that they might be in pre-foreclosure, divorce, or probate, or any of that. Plus, the letter has to actually address their pain points, and every single section of that is different. So there are different websites out there where you could purchase these lists, and really, this is where the riches and the niches part comes in. You can pinpoint your state, your city, and then what type of situation that you're looking for. You want to find a seller, a property owner who essentially is in divorce or, probate, somebody passed away and they inherited a property. All of these things, you can actually itemize those and purchase a list specific to that. And how amazing is that, right? So you could also, once you have that data and that information, you can send them these handwritten letters. And then another thing you could also do, which I find very crazy, you can also pinpoint their telephone numbers and actually send automated messages out to thousands by just doing one voicemail. So there's all different types of lead generation systems that you could do. But again, in order to get there, you need to have the list and the source of who you're going to contact and why you're going to contact them and why you're the person to purchase their property, right? You're their solution. Another really cool thing is, the traditional signs, the signs on the lawns. Now we get fancy schmancy, we can put in QR codes on those signs where people can scan them and then, they can put their information in. Right? Or you can leave a door hanger on somebody's door and just say, hey, and I've actually put these out. Hey, I want to buy your house, and put a QR code, contact me here, or text my cell. And then I put a QR code with my website. So they know exactly who I am. And I'm not just some creep who just left a phone number on their door hanger. So these are some different ways that you could really get into it. And as I mentioned earlier, really the organic reach is really the best when you're first starting out and all of that, building those relationships with people in the community and different agents and doing those transactions. And as you get more sophisticated, as your business grows, and you can get into these automated lead generation systems, having that signage and all these different things out, things like that. And that is how you're going to source and fund your deal. But especially in the beginning, those organic connections are everything. I will tell you, the first property I bought, it was in Stoughton, and literally I got it through Facebook. So I was in a real estate investors group and saying, hey, I'm ready to invest in a property. I'm looking for a single family in this market. does anyone have anybody that they know, right? And this gentleman who was a real estate agent told me, hey, I have this property. I think you'd be really interested in it. It's a single family. And then that's how the first deal happened. So just by getting the word out there, like even through social media channels, organically, going through a local business, agents, whatever, that is the best way to do it and the best way to start. And again, this works for flips and this also works for long-term investments. It's really up to you. But what I would always recommend in tandem with this is when you're sourcing these deals is keep your exit strategy in mind. What happens if you can't flip that property? Can you hold it long term? Because unfortunately, we're in real estate and things can go up, down, side to side, and you just really can't predict the market at any point in time, right? You can have an idea every 6 months, but it tends to do its own thing. You know, we've seen some different market reactions where markets have shifted within 6 weeks' time. And then what do? What if you're somebody who's invested in a property and overcompensated for what the actual value is going to be? Can you refinance that property and hold it in the long term so that you don't lose money and then sell it when the market's back up again? All these different things are really important for you to understand. Say, for example, I'm looking at a 2-family. And when I'm doing my numbers, I'm sourcing this deal, I'm looking at it, I'm saying, okay, well, what can I do with this? Then when you source the property, you need to think to yourself, what actually am I going to be doing with this property? Right? Which is going to lead to our next section, which is analyzing the deal. When you're sourcing these properties, you got to think about, okay, if I have this 2-family, can I condo convert it? Or what's the rental income if I was to hold it? Or what is it going to be if I just flipped it as a 2-family? You see how those are 3 different exit strategies? Know what your exit strategies are going to be when you're sourcing the deal so that you know, should you get stuck in some sort of pickle because the market does something or God knows what happens, right? That you're safe, that you can say, you know what, it's okay. I don't have to sell this property right now because I'll lose, but I can refinance it and sell it in the future, right? So these are the different types of plans you want to be thinking about when you're sourcing your deals so that you know, again, in advance what it's going to look like if you were to purchase that property and move forward with it. So on to step number 5, which is analyzing the deal, the most critical part of the deal, knowing your numbers, falling in love with the numbers and not the property. Super, super important. So let's get to it.